Okay, hello everybody, and welcome to Investing with IBD for July 24th, 2019. I'm your host, Arusha Pierce, and with me today in the studio is Dan Fitzpatrick, founder of StockMarketMentor.com, frequent contributor to Jim Cramer's Mad Money Show. Thanks for being here, Dan.
Hey, thanks for having me. I appreciate it.
On today's podcast, we are going to talk about the markets, the importance of discipline, and current stocks. But let's first get into your story, Dan, because it is a great story. I think it's very, very inspirational, and it's a great lesson on passion. Because you didn't start out in the investment or the finance business, right? You started out on something completely different.
Yeah, totally different. I'm sure there's a joke there about my mom and dad thinking that a stock was like cattle because I grew up in the San Joaquin Valley. We didn't know anything about anything, but I was actually a lawyer. I went to law school and was actually pretty good at it, but I hated it. And so I just kind of got interested in stock. I really got interested. It was actually more option trading. This was in the late 90s, like 1996. And I really learned about the call option. Okay. And in a bull market, the call option is the equivalent of about maybe 40 IQ points. And so I just kind of got hooked on trading, and I hated law.
Yeah.
And so, to make a long story short, and actually I did it so fast it's really not that long, but I just left and decided I had like $18,000 in the account, and I figured that I could make a living trading.
So you were trading on your own while working in law.
Yeah, which is tough on the old billable hours if you're on.
That's true. That's true.
Yeah.
But then what helped you make the transition over? Did you seek out some mentors, or were you reaching out to people?
Yeah, I was actually. One of the people that I was corresponding with, was Jim Cramer. This was when he was still in his hedge fund, Cramer Berkowitz, and he was just kind of a guest in the morning on Squawk Box. And he was really, really nice to me, and he would always respond to me. And he told me later, because we became, I can't say I know Jim as a friend, but I've known him for over 20 years, so I guess that counts for something.
Yeah.
But he said that he noticed that I never asked him about a stock. I never asked him, like, what should I buy, or what do you think of such and such? So I really just got as much as I could from him, as far as knowledge.
Just about investing.
I'm always asking, like, well, what's a cyclical stock? What do you mean by that? Bicycles, or whatever. Like, I didn't know, and he would always be very, very, very nice. And so one day I got an email from him, and he asked me he goes something like, "You seem like a pretty smart guy. How would you be interested in writing for thestreet.com?"
Wow.
So anyway, that's kind of how I started, and then ultimately, I gained a following, and if it wasn't for him, I don't know what I'd be doing, but it wouldn't be this.
Yeah, and honestly, when I started out learning about investing and things like that, I subscribed to realmoney.com, and I was you were one of the first articles I'd always read.
Did I seem smart?
you seemed very smart.
Oh man, chalk it up to good writing.
Yeah, it was beautiful. I learned a lot, and you were passing it on in the end.
Yeah.
And so you took that passion, and then you just kept learning, and you founded Stock Market Mentor.
Yeah, I just kept going. Well, along the way, one thing that I did, I kind of have this way of talking myself into positions for which I'm totally incapable of performing, and then just kind of learning as I go. John Bollinger hired me for a while. Yeah, I worked for him for 5 or 6 months. It wasn't because he thought I was a great protege or anything. I was helping him with another project. Yeah. But I just I'm going like, oh my God, here's John Bollinger. So I'm learning as much as I can.
And let me interrupt you for 1 second. Yeah. John Bollinger, he created the Bollinger Bands.
Yeah.
They're everywhere on a lot of technical charts, and very, very popular.
Yeah, and I really can't look at charts without them, just because they kind of make sense to me. I really, that made sense to me. But the thing that really made sense to me with respect to John was he didn't really take any outside news. Though I will say, in his office in Manhattan Beach, along one wall, he had stacks of Investors Business Daily.
Wow.
Stacks, like I think it had to have gone back to when Bill O'Neill was a teenager. And he just kept them because he would refer back to data, and I think that was before the online stuff. But he never really went to outside sources for anything. It was all self-generated, and that made a big impact on me because I realized that, you know, the people that you know and see on TV or in print or something like that, me having been both of those people, a lot of times they don't know as much as you might think they do. So you're better off just using your noggin, figuring stuff out yourself.
Exactly. And I think a big part about that, and this is what we talk about also, how you get better as an investor, is you have to fit the strategy to your own personality too.
For me, that's everything. Because when I first started trading, I wanted to trade. I wanted to be a good trader. But you stop and like, what the heck does that even mean? It means nothing. It means nothing to be a good trader. You have to specify the type of trading that you want to do. Even you want to be an options trader? Fine. We don't just trade options, like sell options, do bull put spreads or something, or you get my point. So until you focus on exactly what you want to do, then you're never going to get good at it because you don't even know what you're doing. Well, I'm buying and selling. You don't know when you're right. You don't know when you're wrong. You're just flipping a coin. And so what I learned to do throughout and my personality is such where I just flip something, like buy it, oh, I'm up $1, I'll sell it. Oh crap, I'm down $5, better sell that. And so it wasn't until and Mark Minervini was a real influence on me here, where I don't think Mark's the world's best trader. I think he's probably the world's best trader at what he does, his style of trading. And his deal is, dude, if you know one thing, then just do it over and over again. You know, you're not trying to be an encyclopedia. And so what I've learned is that when I just follow my numbers, you know, what's my profit, what's my average profit, what's my loss, what's my batting average, et cetera, the insight that I gain from that is so incredible. You wouldn't, unless you do it, you wouldn't believe it. You'd go, oh crap, it's a waste of time, but it's really not. And so it's how I was able to get over my instinct to just flip stuff and instead learn more about myself and how I make more money when I just hold winning stocks longer.
And we're going to get more into that in segment 2 about you know, the process and being disciplined. But let's switch gears for a second and go into the current market. And so right now with the current market, we're in an uptrend. We've been in an uptrend for most of the year. 4 distribution days on the NASDAQ, though. So some distributions have been collecting. And 3 on the S&P 500. Now, underneath the surface, there are leading stocks. The leading stocks are continue to act well, a lot of software stocks. But the key is also we are starting earnings season, so anything can happen there. What are you seeing in the market?
I am seeing an incredible amount of strength. And but I hear what you're saying, and the data doesn't lie. You know, it's kind of like you're entitled to your own opinion, but not your own facts. So we see the distribution days. But what's really impactful to me, and I wrote a morning note about this, is all of the negative news that hit the headlines today. And frankly, the big one, in my view, was the DOJ opening up, you know, announcing that they're investigating these big guys. And, you know, we don't need to go into that now. But, you know, German manufacturing numbers cratered. Deutsche Bank, you know, continues desperately seeking zero. You know, they're not making any money. Boeing missed they burned like $1 billion. And JP Morgan says the dollar's going to implode. Like all of this negative headlines. And not to mention the political stuff, but that's everywhere. The market gaps down about like 1/3%, and then immediately starts moving higher. So it's a typical thing where you're going like, God, if this stuff isn't going to kill the bull, then I think that thing's just going to keep running.
And it's kind of been the theme this whole year, right? Every chance that this market has had to sell off, you find buyers down there.
And see, and one thing, you know, I don't hear too many people talking about this, I think because it's persisted for so long. Yield. Where else are you going to put your money? Where are you going to put your money? It's like, oh, let me buy the treasuries. Really? I live in California. I'll pay federal taxes on that, and then Gavin Newsom wants his chunk. I get like 3 cents left over. So there's no return on other vehicles right now. And so I just feel like any little dip, people use that as an opportunity to buy. Whether or not, I mean, and I think you can always find reasonable stocks. Is the market overvalued? I don't know. I don't trade the market. I trade individual stocks.
Yep. So the market continues to be in an uptrend, but remember, we are in earnings season, and so anything can happen. And so know when your stocks are reporting. Let's take a quick break, and when we return, we're going to talk about the importance of discipline, why process will improve your trading, and why you should be picky on stocks. Hi, everyone. First, I want to thank all of you for listening to the podcast and your support. And I wanted to let you know that we want to hear your thoughts. And if you have questions for us, we will answer them on the podcast. Email us at investingpodcast@investors.com. And remember to rate, review, and subscribe on your podcasting platform. We're back with Dan Fitzpatrick on Investing with IBD. So Dan, let's talk about your process and really about discipline and being picky with your stocks.
Yeah, there's, what are they, 4, 5, 6, 7,000 stocks in the trading universe. And that's a lot of information. And I think when I first started trading, I didn't want to miss anything. If something was moving, I wanted to be there.
Right.
And I always felt like I didn't get in the right stock. And, I was trying to play the market. And after a while, I realized that if you want to trade well, your process should not be one of inclusion. It should be one of exclusion. And it's a key thing, because what you got to do is you have to define a strategy and approach that works for you, have some parameters that fit that strategy, and then put the blinders on, and everything else you don't look at. You never look at it. You continue to run scans every so often. You don't have to do it every day. You're not going to miss anything. Run scans a couple times a week to see if something crops up. But generally speaking, just, don't look at anything else. And in Stock Market Mentor, we have all kinds of different traders.
Yeah.
And so people are asking me all kinds of stuff like, oh, what about this? What about that? And it's like day trade, swing trade, position trade, investment. And so that got very confusing to me. Mm-hmm. And so what I finally did, because I trade, like I'm not just some guy on the internet, I thought, okay, I got to do this. I have to eliminate all this stuff. I can answer somebody's question, but most of the time I'll say, okay, not my kind of trade, but here's what you can do.
Yeah.
And so when I get a defined list with and I like what I find in MarketSmith, like growth profiles, and revenues and sales, love the accumulation distribution, a couple other things like that I have those parameters that I set, and those are the things I look at. And that's the start. That's the start. Like,
right.
We have people, I'll have people come to my website and I'll have a list of 10 or 15 stocks, and some new guy comes on, he goes, oh, okay, so should I buy all of these? I'm going like,
yeah, no,
don't do that.
Yeah.
So you get the list, which really, put another way, means you eliminate 98% of all stocks, and then you look for entry.
So you mentioned like 5,000-6,000 stocks in the universe.
Yeah.
Right. You're narrowing it down using a MarketSmith to
Huge.
100 stocks or even less than that. How tight is the criteria?
I'd say 100's probably a good number to start with.
Yep.
But it literally is. It's kind of like that's the bin.
Yep.
For that they're in, and then I'll go through other things. And like, for example, if I'm looking for what I call just my growth stocks, one of the things is, and some of this is just standard IBD stuff, I need to see an earnings per share rating of 90 or better. Sometimes I'll drop it down a little bit. I need to see accumulation distribution, which, for my style of trading for our website is really important. I need to see it be a B or better.
Yep.
Now, if I get in a stock that's an A, and then through the course of the trade, which can last weeks or months, If the rating starts to drop, then to B and to C and all that. Honestly, I don't really care about that because I got in it right, and now I'm just looking at the chart.
So you got in it right. Now you have a profit cushion. Now you're letting the stock do its thing.
Yeah, because, and frankly, I mean, I know how it's calculated.
Yeah.
I know how that indicator's calculated. And just because institutions aren't really like buying it hand over fist doesn't mean that it's not a good stock.
Right.
Maybe they're just not buying it right now and they're letting it settle out. I
Yep.
mean, the little pullbacks, the little plateaus on charts, that's the healthy part. Like if you're doing, like you look at, I think it was PaySign, that one that did really, really, really well.
Yep.
But I wanted to buy it, but I couldn't find an entry. But the numbers looked awesome, but I couldn't find it. Institutions buying it. And then, the numbers came, or somebody accused them of some accounting stuff, and we don't need to get into that, but the stock just tanked. And I'm saying that is why you have to wait for the right entry.
Right.
Because if you have the right entry, the stock moves against you a little bit and you know you're wrong. But if you're chasing the stock up to heaven and then the stock starts pulling back, how do you know if you're wrong or just a little late?
Yep.
And so the entry to me is a huge part of the trade, and you have to have the pullbacks.
So what do you say to people? So you're buying it properly, stock goes up.
Mm-hmm.
Now it's normal, especially for people who are newer to this, to get scared out of a normal pullback. Now, I'm not talking about something that comes down in a couple of days all the way back and giving all the gains.
Yeah.
More gentle kind of 45-degree kind of pullback, going through its normal kind of process. What kind of advice do you can you
I
give
think,
those guys?
to that person, and I've been that person.
Yeah.
I'm a blue collar trader. I started out with nothing. To that person, I would say, you're thinking about the money too much. You're thinking about the money. Work on being a good trader. Work on trading well, and you have to define what trading well is. And that means have some parameters, and one of your parameters has to be risk management. What are you going to do when you see the stock moving, drifting a little lower? And so on something like that, if somebody's getting shaken out with the first little wiggle or first little falter in the stock, they either didn't get in right, they bought it wrong, in which case they're managing a loss as opposed to giving back some of their profits, which is a huge difference.
Right.
But assuming they got in right, they just simply don't understand that you have to endure a pullback. If you aren't willing or able to endure a pullback, that's okay too. This is not your style of trading. Then you need to be a day trader. You need to be a swing trader where your deal is, no, I buy with the momentum and I sell right when the stock's pulling back. That's just not me. Probably instinctively, frankly, it is me. I'm 61 though. I can't do that stuff every day.
Yeah.
And also, I don't feel like you make the most money.
Yeah.
You make the most money by getting good stocks.
Yeah, you get good stocks and you let them. The big money's made in the larger trends, right? Jesse Livermore talked about it in his books.
I've
really
never, when I'm sure there's people out there that have made fortunes day trading. Seriously, I just don't know any of them.
Yeah.
But I know, a fair number of people, and know of a lot more people that make their money just like you say, just from following the trends. But what I always ask, I tell my members this, and I think about it all the time. Whenever I'm buying a stock, one of the things I think instinctively is who's behind me. I want to know who's behind me. And who I want to see behind me are institutions.
Right.
I want to see money, not, Jim Bob and Jethro's fish tackle and trading shop, but I want to see real money behind me. And if I see institutions buying, if I see volume, the typical thing that we look for, that gives me the confidence to let that stock ride. And the thing that a lot of people don't realize, particularly beginning traders, is institutions don't change their mind between Monday and Wednesday. And that's a really key point. Like, you get into a stock, you buy it right, and you go, yeah, institutional accumulation. I see the nice trend. It's moving. Oh, hey, it moved down for 2 days in a row. I got to sell.
Right.
Why? Well, it's probably because the head trader, Sid, took a day off, or maybe they just think the stock's a little too expensive because they're the ones that are buying it. And so they're saying, like, let's take our foot off the gas and let the stock settle in. We don't want to drive the price up too much.
And another big thing for institutions is during those pullbacks, when the stocks come down, and it's not, and a lot of times, at least for my stocks, they're not always gentle. They're going to come back. They're going to test you.
Right.
But it's those institutions. They're the ones who are going to come in, support those stocks at those key support areas, like a 50-day moving average.
Yeah, to me, and sometimes people will say like, oh, well, that's too simple. Well, yeah, the best things always are.
Yeah.
Institutions, I don't know if there's like some institutional trading manual, but institutions tend to like to buy stocks at the 50-day moving average. Not every stock, just stocks that they like.
Yeah.
If I'm a big fund and I want to be buying a stock, I don't want to buy it up 15, 20, 30% above the 50-day moving average. By definition, I'm buying too high. So I'll ease off once it gets down there. It's like, okay, this is a pretty good price. I know I'm not buying at the high. And so that to me is a really key benchmark. But like you say, as far as enduring these pullbacks, the steeper the pullback, the way I look at it is the less support you're seeing. Mm-hmm. Because if there's real, like, widespread demand for a stock, you're not going to see it, like 4 or 5 red candles with the close near the intraday low in a row. Yep. Because what that's revealing is there's really nobody there lifting up the stock. Now, there may be a big buyer down below with open arms, but I'd prefer to see the nice, gentle ones where there's widespread interest in the stock, and it's just the weak hands, not a pejorative term, but just people that, are kind of looking to get out of the stock where they're selling. Those are the opportunities, because when you can buy a stock that's an uptrending stock, good fundamentals, it's drifted back to the 50-day moving average, you have your line of demarcation. I know I'm wrong if the stock falls below the 50-day moving average. You give it a little room, but that's a good entry. It's a low-risk entry.
Well-defined, it's low risk.
Yeah.
Now, what about selling into strength? That, for me personally, when I was learning this in the beginning, and it took me a number of years, that was the hardest part for me, because you're finally right on a stock.
Yeah. Well, here, it's interesting, because every stock moves differently. And I had a rare, I won't even say what the name is, but I had a rare trade lately over the last few months where I made like 102% profit. That's totally an outlier, not typically my deal.
I'll take it.
But like, we were looking at the chart beforehand, and you could see I had a really, really good entry right near the 50-day moving average.
Yes.
And this is the important part. The stock never gave me a reason to get out. Yeah. Now, if it had then I would have been out and I would have had that trade. So it's really not on me. Like, I don't really get the credit for that. I get the credit for the entry.
Yep.
And then I get the credit for just sticking with my process and saying, okay, well, my plan is I'll sell if this, if that, whatever. Never really happened. And so then, as far as selling into strength, we're talking about IIPR. So after the stock really popped up, in a big way,
right,
I actually didn't sell into that strength, but I watched it really carefully. And then shortly thereafter, I sold it. And that's a better way to go than chasing a stock down, where you had a 20% profit and you get out with a 12% profit. It's nice profit, but, could have been better.
Yep. So remember, you don't have to buy every stock that you see setting up. A lot of times, the best thing to do is pass on the stock. Keep saying next, wait for that perfect pitch, and have the patience to see and act on the right one when it finally comes along. Coming up next, we are going to talk about some current stocks that Dan is seeing on the radar. So stay tuned. Want to find stocks like the ones on this podcast? A lot of the best names we talk about come from IBD's exclusive stock lists, like the IBD 50 and the Big Cap 20. Whatever type of investor you are, we got a list for you. You can access every one of IBD's lists, plus stock ratings, exclusive analysis, and one-on-one coaching with a membership to IBD Digital. It costs less than $1 a day, but for podcast listeners, we're offering an even better price. Go to investors.com/podcast offer right now and get your first 2 months for only $20. Dan Fitzpatrick's our guest on Investing with IBD. Now, Dan, let's talk about some current stocks that you're seeing on the radar. The first one is Heico, and these guys are in the aerospace industry. They've done really, really well over the last couple of quarters, and they're in the replacement part business that help companies save a lot of money.
Well, yeah, it's kind of an interesting, kind of a cool market segment that they have. First of all, aerospace and defense, big. I don't know what the group ranking is, but I'm sure.
Let me find out right now.
Let's find that out. I know.
On Mark Smith, 14.
And group RS rating, A+.
There you go.
So the thing is, though, you think about it, aerospace, a lot of business these days, but everybody needs to cut costs.
Yes.
And so from what I understand in doing the research on the company itself, they're really good at that. If you can do something for cheaper, same performance, you're going to do it. And so they're growing really well, like you said. Their earnings and revenue growth over the last year, if we're looking at quarterly growth year over year, it's really high. It's all in double digits.
Yeah, you have accelerating earnings, accelerating sales. So 3 quarters have just kept getting better and better, both on those key metrics. Now, the interesting thing with this, and you were speaking about this in segment 2, waiting. You might find these great stocks, but you have to wait for the entries, right? And this one right here, at least in my opinion, isn't set up right now.
If you're listening to this podcast and you're clicking the mouse and buying the stock, you obviously just tuned in and you didn't hear the previous segment, because this is one of those stocks where I look at and I don't own it, and frankly, I may never get a chance. I may never get a chance to buy it. And the thing is, I'm willing to live with that because, I haven't fallen in love with anything here. It's just a great potential trade, but the stock really needs to settle down a bit. They don't report earnings for over a month. And so, but it's a definite stock to watch. It's on my watch list. And I would say this, if it starts trading sideways and gets a little bit closer to the 50-day moving average. Right now, it's about 9% above it.
Yeah.
If it starts drifting down a bit and gets within, 3 or 4%, I think that's a decent entry.
Yeah, so keep this on the watch list, set some alerts. And it's amazing at how you might forget about these stocks, and a few weeks later, those alerts start to go off, and you might have your chance.
Yeah, and that's the important thing about this. I won't digress too much here, but one of the most important aspects of trading is staying organized.
Yes.
You have to stay organized because, you don't, as I'd mentioned before, you want to exclude a bunch of stocks, but for crying out loud, the stocks that you have in your universe, you want to track those.
Yeah.
And I use alerts. I have a trading assistant that I call Lurch, which is just like Fitzpatrick shorthand for alerts. But I'll set alerts at key levels, and then I totally forget about the stock. And I can do that because if the stock doesn't hit a level or do a certain thing that I'm looking for, I don't want to look at it. Again, then it's excluded from my view.
Yeah.
The only time I get the stock called back to my attention is if it's interesting.
So everything's about focus, keeping that focus on, right?
Yeah, and frankly, it's really hard to. It's really easy to talk about it now.
Yeah.
It's very easy to, but it's very, very difficult to do. And most of that kind of needs to take place after market hours.
Yes.
But you need to have a routine. That's the thing. And I've traded kind of from home or in my own little office for a couple decades. And when you work for yourself, it can be really tough to stay organized because it's like your boss lets you do what you want to do because you're him.
Yeah.
So to have a routine of things that you're doing every day and then you're refining your routine, you can get a lot done in a short period of time. But it's all organization.
Yep. It comes down to discipline, and also it's amazing how the best stocks, they'll come back maybe very, very quickly. And then they'll bounce. If you're in a great market, they're going to bounce. They might bounce that day and all of a sudden be extended from that 50-day within a matter of hours.
Yeah, you have to be, I say you have to be decisive but not impulsive. And if you have a process, I've been talking about, I talk about it all the time. If you have a process that you're confident in, then when a stock meets your criteria, act. You're not being impulsive. You're just finally getting the fruit from the process.
Yep, you're following your plan at that point.
Yeah, exactly right. Yeah.
So let's go to the second stock. This is Inspire Medical, ticker symbol INSP. and they're a spinoff from Medtronic back in 2007. And what do you see in this stock, and why are you interested? This is a great story.
Yeah, it's kind of interesting. I have sleep apnea, and it's Frank, and I also travel quite a bit. It's a pain in the butt. It's actually a pain in the face. Either way, you wear this goofy mask. I have this nasal thing, which looks like I really need oxygen bad, like put me in the wheelchair and
wow.
And it's very, very, very inconvenient.
How big is the equipment?
Well, the actual unit has to be by my bed, and it's probably about, 1.5 feet wide, and then about 8 inches high and deep, that kind of thing. So it's kind of a big deal.
Yeah.
You can take them on airplanes without being charged, but then there's like a long hose, and there's this thing that wraps around your head, which gives you a bad case of bedhead every morning, but it's just really inconvenient, right?
Yep. But
it's not as inconvenient as snoring and waking yourself up and all that. And this is a really, really, really big problem. It's a widespread problem. So Inspire, they were spun off, and what they do is they make implantable, I don't know exactly what you call them, but it's like they're electrodes. They make this implantable device that you hook up, you sync with a little unit that's probably about, 3 or 4 inches tall. And, you can hold it in your hand. It's like half the size of an iPhone. And then every night, you turn it on and activate it, and then the unit gets in sync with your breathing, and it stimulates the muscle that causes sleep apnea, because the muscle relaxes, at night and causes you to snore.
Yeah.
So it stimulates that muscle. It keeps your airway open, sleep apnea gone. Okay, so that's great. So I have a person, that's kind of the CanSlim thing, right?
Yeah, exactly. That's a major disruptor, or a potential major disruptor.
I think it is, because like if you look at ResMed, for example, I think, anyway.
Ticker symbol RES.
Yeah, like they, they have sleep.
RMD, sorry.
Yeah,
ticker
RMD,
symbol RMD.
Yeah, I know. I was looking at the same thing. So yeah, they have sleep apnea stuff, but not this.
Yeah.
So I think that's a disruptor. But the most important thing is that Blue Cross is starting to cover this stuff.
Huge.
And I'm actually getting one done within the next few weeks myself. So I'll let you know how it is. But the point is, the fundamentals look good too. So I'm not just figuring out some goofy stock, that I have a personal interest in.
Yeah, I mean, they have great revenues. It's very, very consistently over 60% revenues, a lot of times over 90% quarter over quarter. And on a technical basis, they broke out of a cup recently. Relative strength ratings 97. It's been an outperformer for a little while now. And it's also another thing that we love here is it's a new company, or a new publicly traded company.
Well, yeah, and so the deal is, I remember Dave Ryan, who I know, I've had the pleasure of chatting with him several times. He's an old IBD.
It's a good friend of ours.
Yeah, he's great, and he said, he doesn't care about finding a stock that doubles. He doesn't care about getting the first double. He just wants to get the second or the third or something like that. And that's the way I look at this, because it's trading at around $68, $69 now, and they don't make money. But they've got a good product, and they're just starting to get insurance coverage.
That's
and
huge,
so that's the type of thing where, and I'm not like a fan or anything. It's not my deal. But I look at this, and it just kind of makes sense to me that they're going to start reporting numbers, and they're going to start earning money. And then isn't that when the when the value of the company starts going up?
Right.
So I really do feel like this could be a really, really good trade, even though some of the components of it don't quite fit my list, but enough of them do to where I say, okay, I know this, I know the industry because I'm right involved in it. So I like it, I like this stock.
So another one that's acting really well, a little bit extended right now, but keep on your radar, set those alerts, and it could give you a chance over the next few weeks or next few months. Let's go to the third stock, and that is CyberArk. Ticker symbol CYBR. Now this is a company that I own shares in, and they're in the
do I. Full disclosure.
Yes, full disclosure. We want to make sure they're in the cyber security business, and This is actually a very, very fascinating business because this whole industry has adapted to mobile phones and the cloud.
Yeah, it's really, back when I first started trading, cybersecurity was like, some dude named Cy with a gun and, down in the reception area. That's cybersecurity over there. So yeah, it's a real fascinating field, and I don't think it's being overexposed. I think it's a field that's just going to keep expanding. Are we early in the story? Probably not, but I don't think that means that we're late. And so, yeah, CyberArk has they've got, you can't argue with any of their fundamentals at all, like really, really strong growth. I think it's a little bit tough to be buying right here unless you're adding to a position, which I actually did today. But we've had this stock since $90, so this has been a really, really good mover for us. But another, so I really like the stock in that regard. And like if it pulls back, even say maybe I've got support at about 135. If it pulled back to 135, I think somebody who wanted to buy, that would be a pretty good entry.
Yeah, they have huge earnings, great sales. They're in a great industry group. The industry group ranking is 13. There are a lot of stocks in this group that have done phenomenally well and kept coming up on the radar over this year.
Yeah, there's several that we don't need to go into an exhaustive list, but there are several that are in that industry that are doing really, really well. Zscaler is another one that
ticker
we've
symbol
been in.
ZS.
ZS. We've been in for a while, and theirs is a real interesting. It's a real interesting part of the business. I look at them as kind of like the middleman, where they're in the cloud. And so if you've got business in the cloud, you're a big company, small company, whatever, they're the ones that keep you from getting hacked. And so anything that you send out, you have to go through them. Anything that comes back in has to go through them. So anyway, CyberArk is awesome. Zscaler is also another good one.
So keep an eye on these current stocks, and remember to have the courage to pass on a lot of stocks and wait for the right one to come along. Thanks, Dan, for being on the show.
Oh, my pleasure. It's been fun.
That's it for this week on Investing with IBD. Next week, we are going to have Ivanov on the show, a longtime swing trader, author of many swing trading books, and one of the founders of MarketWisdom.com. So that's it for this week. I'm Arusha Pierce, and thanks for listening. And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. This podcast is for informational and educational purposes only, and nothing should be construed as a recommendation to buy, hold, or sell any securities. Make sure to consider consulting with your financial advisor before making any investment decisions.